Things off for us. Hello, everybody. Good morning. Welcome to FinTech North's latest webinar. My name's Joe Roche. I'm General Manager of FinTech North, and I'm just going to kick things off by explaining a little bit about the work that we do at FinTech North, and then I'll set things up nicely for our partners and our speakers to take it away from there. So, welcome and thank you for sharing your morning with us. It's good to have you online today. So quickly, just wanted to introduce today's webinar, a super pertinent topic at the minute, something that's been all over the news, Bank IT outages, the impact on customer sentiment, loyalty and behaviour. We are delighted to be working in partnership with FinTech North strategic partners, GFT, who of course are digital transformation and leading technology experts and a long-standing partner of FinTech North. So huge thank you to the entire team at GFT for playing such a huge role in shaping our content for the year. We've done some excellent webinars with GFT recently and worked together on some brilliant conferences. So delighted to be working with GFT once again on this webinar. I don't need to talk too much to the topic because we've got some fantastic expert speakers sharing their insight and experience with us on today's webinar, but I will just say a little bit about the work that we do at FinTech North. For those of you who'd like to contact FinTech North and reach out to me or the team, please to us at info@fintechnorth.uk, the email address you can see on screen right now. So really quickly, FinTech North, who are we, what are we all about? As an organisation, we exist to bring together the Northern FinTech community. We exist to promote the North as a centre of excellence in FinTech. And we also exist to develop the sector as best we can in the North by providing, connections, profile amongst our events and our community, supporting startups and scale-ups, as well as new market entrants, any fintechs internationally that are looking at the UK as a base for their expansion. We're here to help and showcase some of the fantastic cities of the North as a great destination for them to establish. This slide, I think, brings everything together nicely for us. Our primary method of achieving those objectives is to host events, conferences, webinars, seminars, trade missions, socials, you name it. We believe that by bringing people together face to face is the best way to build connections, build relationships, and do business with each other. Significantly, I just wanted to highlight that we are entirely self-funded as an organisation. We rely on the support of fantastic partners like GFT to do the work that we do. And just a final thank you to all of our annual partners that you can see now on screen. Of course, too numerous to mention them all by name, but just want to highlight that we work with organisations at sort of every shape, every size, and every stage. So do reach out to us if you'd like to align with FinTech in the North and engage with the Northern FinTech community. We're here to help with that. Just really quickly on the activity that we see across the North, and for those of you who've been to a FinTech North event before, you'll have heard me talk about the North sector. But for those of you who are dialing in for the first time, it might be useful to understand what's going on in the North of England as best we can. So out of about 2,500 fintech firms in the UK, probably about 400 of them are based in the North of England. And if I just take you on a really quick tour from west to east, in the Liverpool City region, we see a real strength there in insurtech and wealth tech. There's over 40 fintechs based in the Liverpool City region. In Greater Manchester, well known as a thriving tech hub, payments, e-commerce, both index really highly, as well as accountancy software. And there's well over 150 fintech firms based in Greater Manchester. Over the Pennines in Leeds, which is where FinTech North started and where we're running the webinar from today, banking, lending, and regtech index really highly. That sort of lending and mortgages expertise is really strong in Leeds. And up in the northeast, there's a bit of an innovation corridor between Newcastle and Durham, and payments also indexes really highly up in the northeast as well. And the northeast is home to some really well-scaled fintechs, such as Atom Bank and Sage. I could go into a lot more detail on all of these regions, but I just wanted to give a really quick flavour of what's happening in the north of England. Two final things to mention before I hand over to Alex at GFT to take it away from here. We are launching a new season ticket concept at FinTech North to reward loyalty to those people who attend multiple paid-for events. So you can now purchase these on any paid-for FinTech North event page, and keep your eye out on our channels for a bit of a campaign going out around this idea. But I just wanted to give people on this webinar a sneak preview of something that we're about to launch there. And finally, just a quick shout out to some of our upcoming events. Our next event after this one is an in-person social in Manchester. We'll then be returning to the virtual format with a financial inclusion webinar on the 27th of Feb. We'll be doing a social in Leeds on the 5th of March. Our next big conference is in Liverpool on the 18th of March. And we'll finish the quarter up in the Northeast with another social event as well. So hopefully plenty of things to stick your teeth into there as a valued member of our community. So that brings me to the end of my presentation, and it gives me great pleasure to introduce Alex from G, who's going to compare the event and host for us. So yeah, it's great to see you, Alex. Take it away from here.
Brilliant. Thank you so much. Thank you, Joe, for that wonderful introduction. Good morning and welcome to everyone. Thank you so much for joining us. My name is Alex Selwood. I am the Partnerships Director at GFT. I have the immense pleasure of hosting this morning's webinar, as well as moderating the Q&A a little bit later on. I'm joined by two very special guests, Richard Callas, Client Solutions Director for Retail Banking at GFT, and Martin Reynolds, Field CTO for Harness. During this morning session, we will be delving into the latest GFT Banking Disruption Index. This report very much focused on consumer concerns when it comes to banks' resilience and whether or not the recent IT outages that we've been seeing in the market are having an impact on consumer trust, confidence when it comes to digital banking. So a very prevalent, very topical discussion ahead of us today, which will be very interesting. Richard will be going through the findings in a little bit more detail. However, before we get into the Q&A and into the meat of the topic, I am aware that not all of you would have heard of GFT before or Harness. So here's a quick overview. GFT are an engineering excellence organization. We have about 12,000 colleagues in 20 different markets. We've been going for almost 40 years. Our bread and butter and where we excel is within financial services, particularly here in the UK, although we do work across other industries in different parts of the world. We deliver some of the most transformative digital platforms and programs to our clients. I'm sure you can recognize some, if not all, of the brands who we work with, and this is just a small selection. We also work with a very tight group of close partners, and Harness are one of those partners. They complement the work we do incredibly well. Harness is the leading AI native platform for complete software delivery. It provides a simple, safe, and secure way for engineering and DevOps teams to release applications into production. Martin will be telling us a little bit more about the interesting work that Harness do and how we partner together. But for now, I'd like to invite Richard to delve into the research findings. I know Richard's had a few troubles with his internet this morning, so hopefully he's still with us and we can get into the bulk of the topic. Richard, I'd like to hand over to you. I'm not sure if maybe we have lost Richard. I know he's been really, really struggling with internet where he is in the Far East currently.
Hello, good morning, Alex. I hope you can hear
Oh,
me.
good.
I
Yes,
did
I can
just
hear
have
you.
a
Brilliant.
glitch, and in the topic of IT resilience, there's nothing I can do, unfortunately, about the internet connection. So please bear with me. I do have my colleagues on standby who can ably take over should the line fail. GFT's Banking Disruption Index. We started this in 2022 as a barometer to understand customer sentiments towards their finances and the digital services provided by their banks. When we ran the initial Banking Disruption Index, it showed almost half of customers don't trust their banks to manage their finances during a recession. And about 2/3 would prefer to use a digital app to do their everyday banking needs rather than actually speaking to an individual in person. In our next BDI, we looked at the customer anxiety and sentiment when using their mobile banking apps. And 77% of customers actually felt nervous when checking their bank balance or looking at their mobile app. That dropped significantly when we were looking at digital and neobanks who were able to provide far more real-time information to customers, so actually enabling them to avoid any particular shock. We found that they were actually more aware of their finances than those perhaps who weren't being offered that service. In later reports, we also looked at international spending, and we found that only a quarter of customers actually understood the fees and charges that they were being levied by some of their organizations, and a third actually didn't think those fees and charges were fair or appropriate. In the last Banking Disruption Index, we actually found that just over half of customers were happy with their banks to use AI to support them, to do analytics, advise them of financial services that would actually help their financial well-being. So consumers were responding quite well to that use of artificial intelligence. If we can have the next chart, please. Thank you. So in the latest Banking Disruption Index, we shifted our lens to have a look at banking resilience, operational resilience, attitudes to IT failures, and just understanding some of the big failures that have happened, particularly last year where we had CrowdStrike, where that actually took down almost 8 million computers worldwide. So trying to understand how customers felt, what had that done to their trust, how do they feel their banks were responding? So it looks at the concerns that customers have, the technology outages that they've experienced, and how they feel towards that and how they react. We also looked at examining public sentiment to using digital and the ideas that they might actually be able to have a cash-free world and a society just using their digital devices, and what their attitude might be to that. And the aim of this was to actually provide those insights so that our clients in the wider banking industry could actually tailor their approach when they were looking and thinking about how they might implement technology solutions or different ways and methods and tools to actually try and improve that resilience. As we know, we've had many IT outages over the last few years, and this has been highlighted recently by a number of high-profile outages over the weekend and furthermore into this week. CrowdStrike, as I say, that was estimated to cost significant sums of money, and we were looking to see, as more IT providers are outsourced, what can the industry do to understand how they might prevent those in the future. Clearly, last year there was the CHAPS outage, and that impacted high-value payments, in particularly, most importantly, impacting things like the property sector and house payments, drawdowns on mortgages, for example. We did see that this has eroded a lot of the customer trust in a very negative way. Next chart, please. So now I thought it would be interesting if we have a short poll to actually look at how the audience today feels about the failures and whether you have any concerns. So if you vote, please, and we'll see whether those results marry to what we found in our research. So if we have a look at the results here, so 52% moderately concerned, 13% very concerned, and okay, that's interesting. So if we have a look at the results of the survey, what we found is and it was quite a significant survey. I
believe we might be struggling to hear Richard again.
Yeah, hopefully we can get Richard back online shortly. It might help if Richard maybe drops his camera off. That might help in terms of bandwidth and things. Hi, Richard, have we got you back?
You do have me back. Yes, apologies.
You just dropped out as you were starting to talk about the survey there.
Oh, okay, perfect. So apologies. So I'll keep my camera off if I can, because I think that might actually help with some of the bandwidth. and connections. So yeah, we found that a third of adults are actually worried about potential failures at their bank. 1 in 5 individuals had actually personally experienced an IT failure in the past year. And on average, it had taken 6 hours for their banks to actually get them up and running in order for them to access their accounts again. About 40% of customers were worried about losing this ability to access their funds, and 36% about being able to make payments. We also found a significantly high proportion of people who now keep emergency cash in their houses in the event of an IT failure. As we know, when these failures have happened, it's not just digital mobile apps that have been impacted. It's also impacted the ability to use cards in point of sale devices and also access cash through ATMs. So some of the outages have been fairly significant. About a quarter of people think that these IT failures will worsen as further digitalization takes place across the industry. Next chart, please. We're going to have another poll very quickly to see how, as an audience, you feel about your cybersecurity concerns, and are you concerned about IT failures limiting your ability to access your bank and savings accounts? So if we have a quick poll, please, and vote away. And then we'll compare and see how these compare to the cybersecurity concerns that customers have.
Richard, we're just having a bit of trouble with the poll.
Okay.
Might need to move on from this, and we can maybe put it on.
Okay. All right. Hopefully we can come back to it.
Yeah.
Okay. Perfect.
Thanks.
So almost half of the individuals responded by saying they did actually fear cyber attacks and data theft due to outages. 38% were concerned about their banks leveraging third-party technology vendors that may potentially put vulnerabilities into the overall landscape of IT within their bank. Now, financial services, they've increased their use of technologies such as cloud computing and AI, and this has actually raised public concerns over cyber threats. We know that there are very robust methods in place to actually prevent from these. However, the banks are having to respond ever more frequently to increasing threats in the market. Recent guidelines have asked banks to ensure that they can actually provide refunds to fraud victims of up to £85,000 within 5 days. That's caused banks to actually start to invest heavily in greater cybersecurity measures and change systems so they can inform their customers. And ever more, this is leading to increased change within the banking industry. Furthermore, we've got regulatory authorities like DORA, which are coming in across Europe, and they are asking organizations in the financial services to have policies and procedures in place to mitigate third-party risk so that they can demonstrate that they are prepared in the event of a failure or an outage to actually provide a resilient service.
Just popping that poll question up on screen now. Apologies for the delay.
Okay. No, that's fine. So if we have a look at the results, interesting. So about a third are very concerned, and half of you are moderately concerned. So there is genuine anxiety around cybersecurity threats amongst the audience. which did actually replicate what we had on the previous slide, which I don't know whether we can go back to. It's fine, we'll move on. Oh yes, thank you. So yes, we had about a third were were very concerned, which kind of represents what we received in our polls. Next in the survey, we turned to the role of cash and looking at IT outages and the importance of cash as a reliable backup. Respondents said that on average they use cash 9 times a month for payments, and over half were very concerned about the future as a cashless society, and worried about the decline of ATM availability. About a quarter actually actively strongly responded to the survey to say that they believe that the government should intervene and actually mandate a minimum number of ATMs that banks should make available to them within their local vicinity to ensure that they had access to cash supplies. And if we look at what the regulator's doing in response to this, as I said, the Digital Operations Resilience Act across Europe, that's maintaining practices and procedures about IT resilience planning and also reporting. The UK government is following with very similar by empowering bodies like the FCA and Bank of England to look at measures that are very similar to DORA and imposing these. And they're all intended to protect both consumers, but also the individual institutions themselves to make sure that they can address and respond in a timely manner to threats and issues and prevent further outages. On average, an outage for a bank can cost nearly 5 million an hour, which is significant and also excludes any sort of fines or penalties that might be imposed on them as a result. Now, when we combine these costs with operational and reputational risks, it makes resilience a real priority for banks so that they need to have that focus. I know that with DORA, for example, it was #1 talking point and trend in boardrooms across financial services institutions across Europe. I mentioned at the beginning, CrowdStrike. Well, that outage is estimated to have cost over 10 billion globally. So therefore, it's striking the costs that are involved. So therefore, the strategic focus that organizations need to put on their operational resilience and IT investment. So to conclude, the financial services sector, it needs to balance its technology innovation to ensure that as it's evolving and becoming more reliable and secure, they look to leverage tools and approaches that can actually improve their operational resilience and actually try and prevent those interruptions to their services. Cybersecurity continues to be a main priority. Obviously, with advances in artificial intelligence, these are leading to more sophisticated attempts to breach any of the security boundaries that banks have got in place. So they actively need to respond to those threats in a similar manner. And this is obviously needed to try and reduce the outages, but also to build trust back with consumers. We believe that they need a proactive risk management and also more strategic partnerships with critical organizations that can actively help them. And at the end, success will depend on their ability to be able to address these concerns, actively uptake better tools, methods, testing approaches in order to actually prevent many of these IT outages we've seen. And with that, I think I pass back to Alex. More information can be found on our website, and there's a QR code there if you want to scan that, and you should be able to download the report. But as I say, it is also available on the GFT website. So with that, Alex.
Brilliant. Thank you so much, Richard. And I'm really glad that
apologies about all of the outages I was having.
No, but I think, listen, it's great that you managed to walk us through the findings. I think that really interesting. And actually, what was interesting to see is whilst a smaller sample of guests today, there are a few parallels in the responses, which I thought was quite interesting. Whilst we're getting some of the audience questions up, just to get us warmed up for the Q&A session between yourself, Richard, and Martin, I'll invite you to come join us on camera as well. Um, I promised a little bit more insight into the Harness platform as we're working really closely with you. So just to get us going, and in very high-tech fashion, I've got my notebook where all the questions are actually written down. Martin, why don't you kick us off with maybe give a little bit of insight into Harness, but also what role does Harness play in helping banks to maintain their resilience?
Okay, so I'll do the 5,000 foot view of Harness. So Harness is an end-to-end software delivery platform, essentially, covering everything that you would need pretty much to get your software, deployed securely, reliably, repeatably, uh, and probably most importantly, and this overlaps into the next bit, and doing that in a governed, audited way. That means that you can't skip steps, you can't bypass those security scans or whatever it is that you need to do. In terms of working with banks, we work with some of the largest banks in the world, and including here in the UK. There has been a mix of activities, and some of it has really been about making sure we get that reliability and repeatability in delivery, making sure all the right things are done and all the boxes are ticked. But more recently, which has been really interesting and has come on the back of those DORA regulations, is how can we actually embed the testing and resilience of failure as part of the releasing software, so that you can release that software knowing what would happen if something fails and already having a remediation in place. And that's been quite exciting, and something we've been working with some of the banks in the UK explicitly with to implement that into their software delivery cycles.
Brilliant. Thanks so much for that, Martin. I think that's a really great overview. I'm just keeping an eye on the questions. If the audience do have any, do use the Q&A function to pop them in. We'll make sure that we get them covered. Whilst we're waiting for those to come in, let's keep working through. For both Richard and Martin, why are banks seemingly more prone to these outages that we're seeing increasingly so?
There's a number of reasons, Alex. Obviously, banks do have investment in significant amounts of legacy technology. Moving away from that is not always a simple process. Banks do look to invest in new technology, and they try and evolve their technology landscape. Those legacy systems have been embedded over years and are often highly complex within an organization that might have 1,000 systems. Clearly, a lot of the big banks have actually grown out of acquisitions over many years. So with each acquisition, the technology landscape becomes ever more complex, with often duplicate systems performing roles within the organizations. So in order to update those systems and also compete with the threat of digital disruptors in the industry, banks are having to make change. And each time they try to make change, they try and leverage as much as possible in terms of governance and procedures to try and limit those. But clearly, when you start looking at the bigger banks and the volume of transactions that they're dealing with, the potential of those changes to disrupt the normal flow is actually quite high. Banks are also embedded at the heart of most consumers' lives. Everything do or interact with, sadly these days, does involve a financial transaction. So therefore, the banks may not actually be having more, but it's not necessarily more prevalent, but it's more obvious. and consumers notice it far more than if a service that they use infrequently were to drop out. It is quite funny because banking is not something that people want or love. It's something that they need. When they need it, they're far more forgiving of outages than they would be, say, for example, if Netflix went down for 6 hours, right? So it's an interesting one. But what we do see is that it's the digital banks like Monzo, Starling, Revolut, the new entrants that we see, they have far less disruption because they're not saddled with that complexity or burden of a historic estate.
Yeah, I think that's fair. I mean, interestingly, some of the banks that we're working with right now, they have, quite aggressive targets to modernize their stacks and to do that safely. I certainly know one of the banks we're working with, they were at this last year, they got to 20%, and the goal for within 2 years is 80% of their systems will be modernized, and they want to do that in a repeatable, reliable way, obviously securely, but also it's a regulated environment. They need to make sure they tick all those boxes, and they want to, keep up with the disruptors. And in fact, often they want to get ahead of them. They want to do what they're doing, but do it better.
Thanks so much, both. It sort of leads on one of the next questions that we have, and I can also see some audience participation now, so I'll get onto those questions in a second as well. We've outlined the problem and we're hearing about some of the targets that you've outlined here, Martin. What do you think are some of the practical things that banks can start to do to reduce some of the occurrence of these IT outages?
I think there's actually more. I mean, there is multiple things. I think I will probably I'll probably start at the end and work backwards, if that makes sense. I think actually having smart ways to be able to detect problems early when there's deployments, and having a strategy for putting it back to what it was before and doing that quickly. I think that is that is kind of key. And I would actually tie onto that kind of some of those modern software delivery practices of being able to deploy new versions, but not necessarily turn on those features. Then I think as you kind of work back through the chain before it gets to those deployed environments, it's actually doing all the testing and steps along the way. Actually, for example, if an engineer is writing some code and he checks it in and actually he's introduced a new security vulnerability, don't let it go any further. Make that a policy that can't be broken. For example, making sure that you have your resiliency testing, and it must happen. It cannot happen. And having those processes in place all the way along, making sure that you know exactly, who changed that thing, when it was changed, how it was tested, did it meet all the compliance, is everything audited, and then it's okay to go into your production environments because it's been through all those promoted environments and tested, and all the resiliency is good. It's going to reduce the risk. Is it ever going to take it away 100%? No, but it will dramatically reduce it, and it will enable you to have that, ability to quickly address those changes, when there isn't a problem.
Yeah, that's really interesting. Thanks, Martin. Richard, I'd love to pass an audience question to you, because I think particularly with some of your neobanking expertise, I think this one would fit quite well. So what is, in your opinion, the reasons why an FSI or financial institutions don't just start from scratch and build best of breed secure platforms in parallel and migrate step by step?
So that's a good question, actually, because some organisations do. So we had the pleasure and privilege of working with Saltbank in Romania, and we were able to build and launch a brand new bank for them in the Romanian market in 12 months. It was in partnership with Engine by Starling, that's Starling Bank, and they span off their technology arm. And what Saltbank were looking to do was, in a very short span of time, leverage the technology from Engine to build a bank in the market that could offer a digital competitor and challenger to Revolut. And this was a wholly owned subsidiary of Bank of Transylvania. So whilst Bank of Transylvania itself didn't look to create a new bank and migrate, they did look to create a new bank that could actually head off a threat to their primary market in Romania. Whether they will ever migrate from their existing platforms onto the Salt Bank type platform, we have no visibility of their sort of strategic plans, but I see no reason why they couldn't potentially do that in the future. And a number of other organisations in the UK have tried very similar, to varying degrees of success. So there is an apprehension about, can you spin up a small organisation and then iteratively migrate? Will the platform be ready? What are the costs involved? Obviously, it's a significant investment to actually spin up another digital platform. So banks have to weigh up this. If you build that new bank and it's not a success, then that's a considerable outlay for no change. So the banks weigh up and balance the levels of investment versus the threat that that investment is looking to tackle. And by doing iterative renovation, you're actually lowering the risk of that investment. And I believe that's probably why, more often than not, they choose to do that iterative renovation rather than actually go for creating a new brand and migrating across.
And do you think and that's really helpful? Thank you, Richard. And just coming back to yourself and to Martin as well, there's another question from the audience here, which I think is probably potentially hard to answer, but going back to your point around they're doing this iteratively because there's probably not they probably don't feel the direct impact. But the question that we've got here is, do the IT outages have impact on customer confidence? Well, yes, some of the research has shown that, but is there a tangible impact that the banks are having on themselves, i.e. are people withdrawing more of their bank balances because they don't have the trust in the bank? Are their customer numbers reducing because the customers are choosing to go to a different bank? It sounds as though without really, really severe interventions, and whilst they're doing these small iterative processes, the banks probably aren't seeing a loss in customer numbers. But it'd be great to get both of yours perspective on that question.
I have a split. It's related, but not necessarily directly. But one of the banks we work with in the US, they started tying their migration and modernization and the outage, and any outages they had, they actually started tying all of that around customer satisfaction, because they were measuring their success of building a more reliable platform by measuring how satisfied the customers were with it. So they took that approach and made that a core measure, for the IT teams. So normally, you talk about things like Net Promoter Score and things like that, and they're directed, more at the kind of sales, marketing, and customer services side of things. But actually, they were using it to drive, good practice and resiliency within those IT systems by actually using it as a measure of success of delivering those systems.
That's really.
I think it's interesting because you're absolutely right, Martin. In terms of different approaches that organisations are doing to actually target things. When we did the BDI index all around international spending, what was interesting to come out was that large numbers of people were aware of lower cost alternatives that were being offered from the challengers like Revolut and Monzo and Starling. And a lot of people actually had those facilities purely for when they were traveling internationally. And I think people rarely only have a single bank account now. They normally have access to other financial methods. So if they do suffer an outage, they can fall back and rely on another method. We saw in the recent survey, that people are now keeping cash at home as a fallback as well. So people are looking to put in place some sort of contingency for themselves rather than relying solely on the one organisation.
Brilliant. Thank you both. In previous disruption indexes, I know that we broke down some of the results also by demographics. So one of the questions from our audience members has been around, did the survey results around concerns about IT failures vary across different demographics of respondents, for example, age? I'm not entirely sure if we drilled into that one here, Richard.
So we did do it by different demographics, and some of those results are available in the full survey. So I don't know them off the top of my head in terms of the breakdown of the specific ages, but yeah, I think as we often find when we do these surveys, younger demographics are sort of like more carefree about their approach to technology, their how easily and quickly they would make data available, whereas the older demographics are far more cautious and make a lot more time in decision making before making things like data available. So the demographics do vary significantly in terms of how they consume and use technology.
Thanks, Richard. Maybe this is a good opportunity to plug in to say, you know, to our audience who are interested in some of the detailed research findings. Up on your screen, you should see the QR code. So do download the report. It does have lots of really interesting findings in there. Right, moving on with our Q&A. Is there an expectation, I think you may have even mentioned this, Richard, for remediation from customers who have experienced outages?
So it's not something that I've seen. Obviously, the banks themselves can often be penalised and face hefty fines and penalties for outages, and it very much depends on the level of impact that makes to their customers. Whether customers should be remunerated, it's difficult. Certainly, when the CHAPS network went down, there were demands because some people lost a lot of money and had house property purchases fall through. So it was a significant impact. Financial remediation, I don't know whether that would have. Obviously, consumers, I guess, would like it, but I don't think it would have any significant impact on the financial services organisations themselves any more than a fine. They are often, they're obviously looking to avoid those fines and penalties by investing in products like Harness and leveraging that to actually help improve their operational efficiency and resilience.
Yeah, brilliant. Thanks, Richard. And actually, that leads us on to one of the next questions. We've spoken a little bit about the neobanks and the digital natives. Martin, just coming back to you, maybe you can expand a little bit on what banks or the larger, more established financial institutions are doing in a practical way to address some of these key concerns.
Yeah, so I think I'll come back to that kind of resiliency testing piece specifically. I think that has been, it's been one of the things that has really been top of mind this past 12 months as they prepare for that, legislation in Europe to come into play. And it's not too dissimilar around resilience in the UK too. Building in that testing, and when we talk about that kind of testing, that resiliency testing, it is actually deliberately breaking the systems in those pre-production environments and saying, okay, well, these systems most days they're highly complex, interconnected systems, and taking one thing out might not take like the banking app down or prevent payments, but it might impact it. And so, they're actually looking at what happens if this part of the service is broken? How does that impact all my other parts of the service? How quickly can I restore that? And what is the process for doing that restore? And making that part of releasing software. So working out which bits you want to try and break and then break them again and again, if that makes sense. But then also knowing that as part of the testing that when you break them, it fixes it because you've built the automations around it because you now know what happens when it fails. So now you can automatically fix it. And they're building those kind of automations in to actually have that resilience. And part of the DORA regulations is being able to show that you have the processes in place to actually do that kind of testing, that you are doing it, because less and less is it oh, data center A is broken, we're going to switch to data center B, because there's so many interconnected systems, and when they're using the cloud and various other things, it becomes, as I said, very complex interconnected system.
Yeah, definitely. No, I get it. Um, I'm just doing a quick time check. I think we've got time for a couple, two, three more questions. So I've got a couple lined up, but just a bit of a shout out if the audience are desperate to ask any questions, do keep them coming. Actually, there's one that's just come in. So, how can AI raise concern on cybersecurity as AI can help in enhancing cybersecurity? So I don't know who wants to take that one, or perhaps both of you can.
I mean, I can take half of that.
Yeah.
But only because AI can help with enhancing cybersecurity. In fact, within our own Harness platform, we use it to remediate security issues. So, if we see security issues, we can provide engineers with what the solution is so that they can actually, remediate that faster. Because often, just because somebody's great at building software, it doesn't make them a security expert. So, it can really help. From the other side, though, I know because we work with banks a lot, we ourselves are quite highly regulated, as in we hold ourselves to the same standards as our customers because they're using our systems. We need to meet a lot of make sure we are able to meet those same requirements. So I know there is, concerns around data security and residency and where that data goes when it goes into AI and who can see it and access it. But I think they're more aligned with the same concerns that people have around data in general. Is my data secure? Is it stored in the right place? Is it processed in the right way? Are we meeting all of our responsibilities in terms of handling that data? So I think it doesn't necessarily add, it's just another vector of the same kind of problem.
Yeah, brilliant. Thanks, Martin. I know.
And Martin's absolutely right, Alex. That's exactly the trend that we're seeing in GFT. We have a lot of our clients asking us more frequently now to perform those methods of chaos engineering that Martin was referring to actively go in and deliberately break things and monitor what happens when things break so that you can actually put those fallback mechanisms in place to automatically recover. So things do actively become a lot more resilient as a result of that.
Yeah. Thank you so much, both. There's there's quite a big question over here, which I think is important to ask, and I think kind of goes back into the quality of engineering that that banks have. So, we're seeing an increase in these IT banking failures, and despite this, from your opinion, why don't the financial institutions prioritize the quality all throughout the software development lifecycle? And it seems to still be an afterthought. I know this plays right into what Harness do, Martin, so perhaps that's one for you.
It is, and I think I'm going to qualify a little here because I think financial institutions, banks, they they do try and instill that quality across the whole SDLC. I think some of the challenges that they've had is that the rules and regulations and the governance that they put in place across those systems can make it cumbersome, and it was often very manual, which made it slow. And because it's manual, and a lot of those things and processes were kind of outside people's core jobs, but they knew they needed to comply. So, I think the drive to speed up innovation but also maintain that has caused some of these problems. And I think really the goal is to automate the quality make sure that all those quality gates are happening automatically as part of the process, stop them being manual. One of the things, and I believe it's Citibank, but I'll double check. But they had what I could only call a phone book of regulations that software engineers and how they build software kind of thing that they used to have to read, new developer starts, here's your phone book, so you know how we build software. And 3, 4 weeks later, they might actually be able to start coding. And that's one of the things that they've really changed because they've taken all those things that are in there and said, actually, no, we'll do code quality scanning and we will do security testing here and here and here, and we will do resiliency testing and unit testing and QA testing, and they embed them in that process. And then on top of that, because they've essentially codified the policies, um, those policies then say if somebody tries to bypass them because they don't want to fix something, actually the process doesn't let them. There is a phrase, and it's used quite a lot internally, which is, the ultimate solution to this is make it really easy for engineers to do the right things and really hard for them to do the wrong thing. If you make it easy for them to do the right thing and you give them the right tools and the right information at the right time and the right place, then those practices become intuitive and easy for them, and they're not spending extra time taking on tasks that aren't really core to what they love doing. I developed software for a long time, and I liked writing code and solving problems. I didn't like doing all the other stuff around it.
Thanks, Martin. I'm mindful that we're going to run out of time soon. I'd love to hand over to Joe shortly just to wrap us up. I think it's been a really fascinating discussion. But before we hand the reins back to FinTech North, one final big question to ask both of you. It's quite an open-ended one. Richard, perhaps I'll go to you first. Hopefully you're still with us. But what do you believe in this in this topic? What do you think the future holds?
So the future is interesting actually because banks will invest in more tools and engineering approaches to actually improve their operational and the efficiency and integrity and quality of their deployment pipelines. I know that artificial intelligence is ever more being used as well when it comes to quality and testing, also in identifying potential failure points, debugging code before it's released. So I think the future is actually right, and I think the technology is evolving ever faster that will actually assist organizations in improving the quality and resilience.
Oh, great. No, that's really good to hear and something very positive as well. And, just before we hand over, Martin, I'd like to ask you the exact same question is, from your perspective, what do you believe the future holds? And something equally bright, please.
No, right. No, I mean, genuinely, we are seeing that kind of investment in modernizing their, software development life cycles, and extending the way their applications are deployed. Some of the recent things that banks have been doing is kind of adopting that feature flag approach. So the deployment and then turning on individual features and that ability to turn them off. Always, smaller changes, smaller risk, and but doing them more often. And we're seeing that, across almost all the banks that we work with, they are constantly trying to simplify and improve those processes to make it less and less risk. And they ultimately want their customers to have a good experience. And they are very dedicated to it. And certainly the teams we work with, and I know you guys know this too at GFT because we work alongside you. They are very dedicated and very committed individuals, and they want to deliver quality and they want to do it really, really well. And I think that's what we're going to continue to see as they evolve into those more modern practices.
Yeah, brilliant. Okay, the future is bright. Stay tuned and watch this space. Thank you so much, Martin. Thank you so much, Richard. I think you have brought a wealth of very interesting knowledge to the topic today. Thank you to our audience for the questions as well. Do engage with us, find us on LinkedIn. I'm sure that we'll do various different follow-ups, and please download our reports. And of course, thank you so much to FinTech North for having us. Joe, I'll hand over to you to round us off.
Thank you so much, Alex, and yeah, big thank you to you for superbly and expertly navigating this topic there as a fantastic chair for FinTech North. So yeah, huge thanks to Alex and all the team at GFT and both of our wonderful speakers there, Richard and Martin. Next steps for our webinar. So we will be producing a write-up and sharing that with our entire community across all of our channels. So yeah, keep an eye out for that. We'll also share the recording of this webinar for those of you who weren't able to join us live. So you can catch up after the fact. So that's just to give you an idea of what our next steps will be. And yeah, in addition to the team at GFT, I want to say a big thanks to the FinTech North home team who've been hard at work posting poll questions, putting information in the chat for all of our attendees. And the final thing to say is to just thank you all of our wonderful participants. The FinTech North community are always so engaged and interested. So thank you for all of your questions. And we'll hope to see you again on a FinTech North webinar soon. So yeah, thank you very much for your time. Bye-bye.